is a specialty chemical company. They operate in a lot of different segments, including construction, transportation, consumer products, electronics. Eastman is also a very global company, and about 54% of their revenues come from North America. Then about 27% come from Asia Pacific and 22% from what they call EMEA, which is Europe, Middle East, and Africa. Eastman's performance over the past decade has been very impressive, and you can see that in their operating margins as well as the cash flows and income. We'll take a look at operating margins real quick, and you can see back around 2004, 2005, they were hovering in the 4 to 6% range. Since around 2009, they've consistently been around 11 to 14%, even had a big spike up to 20% last year. Probably not sustainable, but still making significant improvements over time. You can see this in the cash flow figures as well. Incoming cash flows are around 400 to 600 million from 2004 to 2008. And then post 2009, Eastman's been in the 700 million to 1 billion range. Once again, they had the brief spike in 2013. But even ignoring that spectacular year, the numbers have been very impressive and have consistently improved over time. Eastman has been doing a lot of acquisitions as well. They did 2.8 billion in acquisitions in 2014. The CEO believes that they are particularly good at integration, and that's one reason for their, I guess you would call it a roll-up strategy, acquiring a lot of companies. And you know, this is one of those areas where companies, large corporations, often have a mixed track record. Some companies think they're really good at it when they're not, and other companies are actually really good at it. I think Eastman, the track record so far has been pretty good with acquisitions, so I think that's a big competitive strength. Let's take a look at the dividend for Eastman, and that's another area where they're looking great. Around 2010, the dividend was about 20 cents per share quarterly. That has doubled since then, so very impressive growth on the dividend, and the payout looks very sustainable to me. Let's take a look at valuation for Eastman, and currently Eastman is selling at around $77 per share. Now, Eastman's had very strong management, and they've grown cash flows annually at about 12% annually over the past decade, which is impressive. I don't expect that to continue to moving forward, but I still think that they'll do pretty well. So using moderately conservative growth assumptions, I come up with a valuation in the range of $80 to $90 for Eastman. I think that makes Eastman slightly undervalued, and what I really like about that is that there is significant upside potential. If Eastman can continue outperforming like they have over the past decade, this stock could easily be worth $110, $120. So I don't think necessarily that your upside is limited to 80, 90 right now. I think there's a lot more upside beyond that as well. Let's take a look at the risk factors as well. And I think the biggest risk factor for Eastman is what I would call cyclical or recessionary. They suffered a little bit in the last recession, and it's clear that this company loses some volume in a recessionary environment. It makes sense given how diverse its consumer base is. So if there's a recession, Eastman, the stock's going to get hit a little bit. But I still think the risk on that is it's not that bad because there's some margin of safety in this stock, not a ton, but a little bit. And the company's got such great management. I still think if you're going to buy a dividend producing stock right now, Eastman's an above average choice. Anything below $80, I think this is a slight bargain. Let's sum up the case for Eastman. I think this is a reasonably good conservative dividend type stock. It looks slightly undervalued to me. It's not dirt cheap by any stretch of the imagination, but given how great management has performed, I think you have some upside potential. The biggest risk is just that there's a recession, and then in that case, almost everything's going to get hit. I think it's likely that Eastman will perform reasonably well compared to other stocks in a recession. So overall, I think this is a pretty good buy if you're looking for a little bit of income and you want a solid conservative company, something that you know is not going to crash or go bankrupt during a recession. Eastman is very solid dividend stock. All right, thanks for watching. I'll see you next time.